of committed capital, raised an $800 million fund during the middle of last year to invest across IT and energy. The firm has its heritage with another asset management firm called Weiss, Peck & Greer. The venture capital arm spun out in 2000, and along the way our managing directors have made a number of investments, some of which you see up there. About 3 years ago, myself and one of the partners started the Cleantech practice, and I'm going to talk a little bit about our journey through trying to understand Cleantech, how it fits into the investment landscape for us, talk about some of the criteria, and also some of the investments that we've made. So to start, to motivate the question of why folks are interested in Cleantech today, I present some data charts. Hopefully those in the back can see. On the left-hand side, you can see the amount of electricity generation in some of the largest countries around the globe. Since 1980, the amount of electricity generation in the US has doubled, and then in countries like China and India, it's gone up by tenfold. So that massive growth in energy demand, unfortunately, has also led to an increased dependence on carbon dioxide related fuel sources and energy sources. On the right-hand side of the chart, you can see over the course of the last 400,000 years, the red line shows the amount of carbon dioxide in the atmosphere, and you can see that it's been relatively cyclical, but then at the right side of the graph, there's a very sharp spike upwards, and that really corresponds to the Industrial Revolution from the last 200 years. And then in blue, you have the corresponding temperature change at the surface level of the Earth. And you can see that the two are in very tight correlation. And of course, over this macro timescale, it's unclear when the full effects of global warming will be seen, but we're already starting to feel that today. So with that increased dependence on carbon dioxide-based fuels, unfortunately, even the most optimistic projections of our energy supply going green suggest that maybe about 20% of that energy by 2020 will be from renewable sources like solar, biofuels, wind, and so forth. And so it sort of poses this interesting question of how do we solve the climate change problem, and is it all renewables, or is it a portfolio solution that will also require us tackling some non-renewable sources of energy as well, and saving energy by applying different techniques of energy efficiency. And we're going to talk a little bit more about that shortly. If you look across the globe, I have got another couple of charts here that might be tough to read from the back, but I show the percentage share of hydroelectricity across a number of countries, as well as the percentage share of renewables as over the entire portfolio of energy sources. And you can see that on the far left of these two graphs, the US is quite small relative to where some of the other countries are around the globe, many of whom are in Europe, a lot of the Scandinavian countries, and also other parts of Asia. On the right-hand side, you see the percentage share of biofuel vehicles, and what I mean by that is the number of vehicles that intrinsically can take bio-based fuels as an energy source without any kind of modification, that being ethanol. And you can see that in Brazil, a number of the vehicles there, a significant proportion, majority, are actually ones that you can pour ethanol in directly and it would function, whereas in the US, you have to blend it in with gasoline in order for it to work. So the net of the story here is that in order to curtail carbon dioxide emissions, it's not going to be one answer. It's not going to be put all the solar panels that we can on the roofs around the globe, or just switching to biofuels having the solution. What I have here on this graph is it's a study that was done by McKinsey a couple of years back that shows in order for us to maintain business as usual increase in carbon dioxide, what are the different pieces that we have to do in order to reduce that to, call it, 1990 levels. And you can see here, business as usual is the blue line. So if we continue to do what we do today without any kind of curtailment, in 2030, the amount of carbon dioxide emissions per year is roughly going to double relative to where it was in 1990. And you really need to have a number of different techniques in order to solve the climate change problem. The first dotted line there, you see that if we apply a lot of techniques around energy efficiency, which would include using greener buildings, doing lighting efficiency, HVAC efficiency improvements, having EVs. That would help improve that somewhat. With low carbon energy supply, that's where you get into the renewables like wind, solar, and taking share away from the coal, oil, and gas sources, but moving to renewables, you curtail it even further. And then last but not least, trying to increase the amount of absorption of carbon dioxide in the air from increased forestry or agricultural types of techniques so that you can suck more of the carbon dioxide out of the air. Those are some of the techniques, but the net of it is it requires a portfolio approach that investors, entrepreneurs, and enterprises really have to look into over the next several decades. So why Cleantech? Why has this area emerged over the last several years as a very important area for entrepreneurs, investors, and enterprises to consider? Well, a couple of reasons, as I go around the horn here, starting with massive end markets. Venture capitalists like markets where you're not demand constrained, and it doesn't get any bigger than energy. Depending on which source you quote, energy is a multi-trillion-dollar market, and no matter how you slice and dice it, whether it's the fuel sector or electricity sector, the wind sector, however you want to carve out your addressable market, you're looking at multi-billion-dollar markets pretty much wherever you look. And as you get even more specific into various sectors like solar, even if you look at very specific parts of the value chain, they can still represent very sizable opportunities. A shift in economics. So a solar cell cost about 100 times more to produce 30 years ago during our last energy crisis than it does today. The cost of cellulosic ethanol is coming down aggressively over time. The cost of being able to manufacture certain types of storage technologies has been coming down over time. And so in many of these industries, for the first time in many of these industries' histories, you're getting cost levels that are getting close to grid parity, and in some cases beating grid parity, or the substitution of using a carbon fuel source. So that's very exciting in a lot of these areas. But despite those advancements, there's still a significant amount of technology headroom across all of these sectors. So many of you probably in the solar sector have heard about a lot of the thin film production techniques. The quest for getting higher efficiencies in solar is only at the early days. We're far below what the theoretical efficiencies of solar, as well as of silicon, as well as a lot of non-silicon thin film technologies, far below the theoretical efficiencies that they can produce. And so there's still a significant amount of technology headroom in solar and across a number of these other sectors that is ripe for disruptive innovation. And then the last two items, corporate, social, and government imperatives. It's hard to imagine a recent time in history where you've had such a perfect storm of support across these various constituencies to go green. And whether we're thinking about the corporate support at places like Google, where hundreds of millions of dollars have been allocated to sustainability initiatives, with Walmart, excuse me, with Walmart as well. Water. I need to sustain my voice here. A significant amount of capital has been devoted in a lot of enterprises towards sustainability initiatives. And then, of course, with the government, you don't need to look any farther than Obama's stimulus bill, the ARRA, and all of the capital that's being devoted to various initiatives to mitigate the effects of climate change. So what has that resulted in for the venture capital investment community? There are a lot of different sources with a lot of numbers being thrown around, but I think with this source, what you can see here is the bars reflecting the total dollar amount of VC investment in Cleantech, and the line representing the percentage of total venture capital investment. And what you can see here is that since 2002, the amount of dollars going into VC has gone up dramatically. And very importantly, as a share of the overall amount of dollars going into venture capital, Cleantech has now become a very important part of the portfolios of many venture capital firms, including Lightspeed. If you look at 2008 specifically, where is the share of dollars and investments going into? Which sectors have been getting the most amount of attention? On the left-hand side, you see that split based on the number of investments across a number of the more prominent VC firms that we've been tracking. And you can see that about 113 investments were made across this basket of venture capital firms, and about close to 60% were concentrated in solar efficiency and biofuel. And then on the right-hand side, of the roughly $3.3 billion that this represents in this basket of investors, again, you see solar efficiency and biofuels kind of